What dynamics may show oil prices? Will they rise or fall? This question is relevant not only to traders and investors that monitor the energy market situation. Oil prices have a global influence. Oil serves as a key indicator of economic stability and is a major driver of growth. This makes oil prices highly sensitive to geopolitical and economic news. It's quite challenging to predict such developments. In addition, the number of factors that affect oil prices is constantly growing. Geopolitical tensions in Europe and the Middle East remain the dominant forces influencing oil prices. Notably, hopes for a strong rebound in China's economy have led to disappointment. A chaotic real estate market is causing a decline in the number of homebuyers, while rising deflation is squeezing consumer demand. Thus, in November, crude oil processing at China's refineries dropped to its lowest level in 5 months to around 14.3 million barrels per day. 5 refineries were shut down for seasonal maintenance. Slowing economic growth in China has forced OPEC to revise its global oil demand outlook downward. In an August 2024 report, the organization lowered its estimates by 135,000 barrels to 2.1 million barrels per day. At the same time, OPEC is working to stabilize oil prices by restricting production within the cartel. Although not only members fully comply, OPEC's decisions still influence the market. The possibility of new US sanctions on Russian crude oil is also fueling strong speculative interest among traders. As for the economic condition, China may still avoid a severe downturn. Meanwhile, the European Union is on the verge of a deep recession. Europe's economic situation, particularly in the industrial sector, worsens almost daily, with no clear solution in sight. In the ongoing 2024 oil market have experienced significant volatility. Market behavior has been shaped by numerous factors, with the geopolitics and global economic uncertainties at the forefront. While Europe was the main center of global tensions last year, the Middle East has now joined as a major area of concerns. The risks are not only increasing but also shifting to the world's primarily oil exporting region, raising concerns about the global economy as a whole. Unfortunately, these factors are unlikely to disappear in the coming year. Moreover, they will likely intensify. In particular, a new focal point of a global tension has emerged in 2024. Southeast Asia. This region will probably become another source of instability in the future. Meanwhile, oil prices are on a track to end 2024 close to where they were at the start of the year. Brent crude has fallen by 1.7% this year, extending the global downtrend that began in the summer of 2022. The Brent oil benchmark has dipped from a high of $119 to around $70 per barrel. Its price spent the entire year trading at a sideways range bounded in the levels of $70 and $90 per barrel. In such a range-bound market, the best way to make a profit is to follow a breakout trading strategy that focuses on the range boundaries, selling at resistance levels and buying near support. Breaking these key levels allows traders to ride the resultant trend, whether up or down. Looking ahead, the main drivers for the oil market in 2025 will likely be the United States and its future president, Donald Trump. Of course, the primary pressuring factor will be a stronger dollar. Its rally will be fueled by numerous factors, including Trump's promised high trade tariffs, higher U.S. interest rates relative to other major central banks, a robust economy, and heightened inflation. Meanwhile, Trump's return to the White House increases uncertainty for financial markets in the coming year. Experts on Wall Street are almost unanimous in the outlook. Analysts from Bank of America, Goldman Sachs, Deutsche Bank, Morgan Stanley, and 6 other top global investment banks participated in a recent survey, and the overwhelming majority of experts predict a decline in oil prices in 2025. Despite OPEC Plus countries' announced plans to delay increasing production, analysts project that Brent will trade around $70 per barrel by the end of the next year. Production in non-OPEC countries is expected to grow faster than the global demand in 2025 and 2026, leaving OPEC Plus with a little room for maneuver. Interestingly, Goldman Sachs still expects Brent crude oil to rise to $76 next year. The firm attributes its bullish forecast to a significant drop in the global crude oil inventories in recent months. According to the investment bank, oil prices will gain value when the United States and China start replenishing their stockpiles. So that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us. And see you soon!